Hello dear traders and investors, today is Friday, 30th of December. Here I'm presenting a market review prepared for InstaForex. By the end of this year, I have a couple of trading ideas. Gold has been trading in the bullish channel, which makes it an attractive asset for sellers. Let me remind you that on a weekly chart we've already seen the double top. I expect that this week the breakout will remain false. Following a false breakout, there has been an attempt to break the third wave. As a result, the price has reached the 50 FIBO level. It's reasonable to look for selling opportunities now. If you decide to sell, place your stop loss above the current week's top. If gold starts declining, we can expect a sharp plunge. By the way, let's have a look at the last year's chart of gold. It had been rising up to December 31 and took a nosedive on January the 3rd. It plunged drastically, in fact. Then gold rebounded but failed to reach previous highs. So last year the situation looks similar. Gold was rising throughout December, but then it plunged in two massive bearish impulses in January. Probably the same scenario will unfold this year. Today, or maybe on January the 2nd, we can expect a plunge analog to last year. Euro-dollar pair broke the high of the previous day. We've already witnessed several false breakouts. Yesterday, the greenback weakened amid downbeat statistics on the US initial jobless claims, so the pair rose. I've noticed an interesting tendency of the euro-dollar pair reversals on the 15-minute charts. Traders can take advantage of it, setting stop levels at the distance of 20-30 pips. If the current support level is broken, it will trigger a sustainable downward trend. I expect that the price will be unable to break yesterday's resistance, so the downward trend may continue. There's plenty of attractive targets on the downside. The nearest one lies at 1.0530. There's also the double bottom, so I'm strongly bearish on euro-dollar pair. Yesterday, there were not any significant breakout which could trigger any reversal. As for the pound-dollar pair, the picture looks much clearer. Its chart shows clear levels of buyers' stop levels below the round mark of 1.2. It had a good trade setup that appeared on December 28 and was tested at the 50 FIBO level. The pound sterling is much weaker than the euro. There is every indication that the greenback is likely to strengthen, but it has not happened so far. Perhaps this is because of the low liquidity. As for the JPY USD, there are no change. My trading plan remains the same. That's all for today. See you next year.